What's up, guys? Let's do a analysis of the trades I took this week, mainly on euro dollar and pound dollar, but I also took some trades on euro kiwi and pound Aussie, so we'll go through all of them. So going into the week on euro dollar, on my pre-market analysis for euro dollar last week, what I said was we had maintained this bullish order flow, right? Price held this bullish fair value gap and this bullish fair value gap, but it came into a daily time frame equal highs at this bearish fair value gap that was previously held at the start of the year and found some resistance. So on weekly time frame, it wasn't clear to me which direction price will go. On daily time frame, we got this strong bullish order flow, and price came down, held this fair value gap last week and started to consolidate. It didn't take off, so I maybe thought that price would come deeper in and then push higher up, because we had rejected these equal highs below this fair value gap, which is what started the year. Trade one, I took a long, even though price had rejected this drawn liquidity, the previous drawn liquidity, and also held the daily time frame fair value gap. I was expecting price to go up to at least this level, or on the lower time frame it was clearer. I wanted price to go up to at least this level. So we opened on Monday and we started to go sideways, put in this bullish engulfing candle, and after seeing this, I wanted to take my drawn liquidity down to that level and take an entry on a pullback. Price formed these almost equal lows, and we get a bearish rundown, followed by a bullish engulfing candle, which provided an inverse fair value gap, and I took an entry at that level. Targets were at those highs and stops were here. Could have taken targets at these highs as well. However, price pushes down, takes out my stops, and then it continues higher and eventually comes down to these equal lows, which is where it finds strong support and then pushes price back up to those highs. Where on the 1 hour time frame, I was looking at this bearish fair value gap for shorting opportunities, but I didn't get any, so I didn't enter. This was honestly quite a bad trade because there were no fair value gaps for price to pull back into, which is something I always look for, and price took off without any fair value gap being respected. Honestly though, even after taking out the drawn liquidity, pulling back and holding these equal lows, price provides a pretty good entry on the 5 minute at those equal lows, which is this consolidation, followed by a close below, followed by an engulfing candle and a target, back up to those fair value gaps would have been a good entry, but it's not something I was looking at. Going into Wednesday, I was waiting for price to reach these fair value gaps below the highs, especially when we have one fair value gap and the other one right above it. Price can find potential resistance at that level, and I was waiting for price to reach that on Wednesday to look for a short. Price taps into that fair value gap and I start looking for a short. I took a short at this level. Price put a sharp turn up and then started to close below with this inverse fair value gap, and then I took a short right there with my stops, I believe at these lows at first. I get stopped out, however price comes into the 50% mark of that fair value gap and I look for another short. So yeah, after taking that loss, I took another trade right here after rejecting this 50% mark, and I believe I took it at this level, and I had placed stops right above at these levels, and targets I believe were down to here, so 5R, and then what does price do? Price puts in, I was waiting for an engulfing candle for some reason, and that didn't come, and because of that I exited the trade, and then price just started to move in my direction with no mercy. Yeah, this is later on in the evening. Comes down and then tanks the next day. Right, could have been a very fruitful trade. So there's that. This was me trying to catch the top, especially because when we're deep in discount like this on a daily time frame, above some resistance, equal highs, at fair value gaps, especially when there's two fair value gaps and price comes into the second one, it finds some kind of a resistance. Same thing happened on pound dollar last week, and that was exactly what my trade was based on over here. So last week or last month, right here, got these highs below this low, got the first fair value gap, and we got the second fair value gap that price taps into and then just tanks. Going into Thursday, we've got this bullish order flow maintained, right? Even though we rejected this level, I don't expect price to reverse at this level. We've still got the bullish order flow to consider, and we've got this daily time frame fair value gap that price can tap into. I was waiting for price to come into that 50%, and it does with a sharp, just strong bearish momentum candle, especially after the retail sales news. This is on Thursday, by the way, and this is something I look for, especially when I am bullish and I want price to go bullish. I want to see a candle like this come into a high time frame point of interest. So the point of interest here being the daily time frame fair value gap's 50%. We also have this order block right here below this fair value gap. So this is another trade that interested me, and we have these consolidations happening just before price starts to. Yeah, this is exactly what I was looking for. Consolidation, a sharp close below, and a sharp close up, and I believe I entered somewhere around here with stops here, and then I was targeting, I don't know what I was targeting at these highs. However, again, because of, I don't know, some kind of fear, I think I took a loss on pound dollar in the morning. I exited the trade somewhere around here. I wanted to exit half a percent at that level. However, I ended up taking out the entire order by accident, which was annoying because I did want to let the trade run, and it runs obviously. Every time I exit a trade early, it seems to run in my direction. There's something there that I'm taking too many unnecessary trades beforehand. That gets the stops gets hit, and when I actually take a good trade, I want to exit that trade straight away because I've already taken a stop and I don't want to take another stop. So that is something I need to eliminate, all those shitty trades. And there we go. We could have cleared the whole equal highs. It's probably going to go up to these highs at least, right? So let's see. Looking at just euro dollar for the week, had I just stayed with the trade and not taken, not early exited them, then I could have potentially ended up with at least, 2R here, 2R here, a -1, at least I would have been up 2R. But because I took loss on 2 trades and then early exited the 2 profitable trades, it was net negative -2% on, overall on pound euro dollar, which is annoying because I need to get better at not exiting these trades early, especially when I'm so confident in them. I saw this liquidity grab on weekly time frame on Euro Kiwi last week, and I had a clear drawn liquidity set right down to that level, and I started looking for a trade in that direction. So I got a clear drawn liquidity daily time frame. We got bearish fair value gap being respected, and on the 4-hour time frame, we've got bearish order flow respected, right? But fair value gap respected, and on the 240 again respected right there. Monday open held this bearish fair value gap, displaced on the 60-minute during Asian session, and then during London open it was like this, and I was waiting for price to come into this bearish fair value gap and look for an entry. However, on the 5-minute, price just comes and drops from that level right there. And because the drawn liquidity is clear right here, I was looking for another trading opportunity after this fair value gap was formed. So after that 60-minute fair value gap formed, right, price pulled back into that fair value gap. That candle hasn't formed yet, and I took a short right here after seeing these equal highs being formed around, I believe, so around there. I put my stops there. Actually, I put my stops up here to give it some breathing room, and target was down to that level. However, I was quite aggressive. Should have waited for some kind of market structure shift after that fair value gap, after that equal highs being formed, and the price just consolidates at that level, doesn't close below this level at all, and then pushes up and eventually takes me out on that trade, and that was a loss that I took. Like I keep saying, if we're gonna see if price is bearish, then you want price to do some kind of a strong bullish move into a higher time frame POI, and then take an entry at that level down to the low. So after seeing this push up, after accumulating all of this liquidity here, and price coming down to this level, I took a short at these highs, and then I put my stops up here, and my drawn liquidity and my entry target was down to that level. I placed my stops above these fair value gaps. Ideally, if price was going to come, it shouldn't go above this fair value gap on the 15-minute. And let's see how that played out. Price again comes down, pushes back up, and then find some resistance at that level. On the 5 minute, we still have all of these fair value gap that price is respecting, and eventually the next day we see price coming, making its way down and hit that drawn liquidity. I took some partials after price started to move in my direction at this level, I believe, and I was expecting price to hold that low from that low, which it holds, and it finds strong support at that level. So yeah, good trade. However, I entered too aggressively to start off with, and then I entered, this was another good entry. Price came up, failed to close above this bullish fair value gap, again fail, and eventually it tanked. Ideally could have just entered at the 618 pullback to avoid all the fuss. But given the strength of this bearish candle, I wanted price to come down to this drawn liquidity, because we had held this bullish fair value gap at the close of last week. We'd also held this daily time frame fair value gap right here and had failed to close above 1, 2, 3, 4 days in a row. But because the order flow is bearish, we've got bearish order flow, equal highs being maintained. We had another bearish fair value gap. I was looking for a short Monday morning. So yeah, coming into Monday, we respected that 240 fair value gap, and then we started to displace. This is Monday morning, 7 o'clock candle. We start to displace bearish with bearish fair value gaps. So this was a good sign. The drawn liquidity is clear. We've got room for price to come down to. This is the drawn liquidity, previous week's low. We've put in more fair value gaps, another order block, and I believe I dropped down to the 5 minute time frame. I saw these equal highs. Displacement. Honestly, this would have been a better entry here at 618 pullback, but I believe I took an entry after seeing these equal highs being held, and I took an entry somewhere around this level with stops at these highs, and I wanted to take targets at the drawn liquidity, I believe, down to these lows, even with a 1-to-1, and then price immediately pushes up and closes me out. I believe I took, my stops were actually here, and I took an entry after close below this bullish fair value gap with this inverse fair value gap at this level, and then I was aiming for that low and I got stopped out. I also took a trade somewhere around here, I believe, even before this, I think, probably after these potential equal highs, and then I got out straight away at break even. Let's see what price does after. Price comes into this fair value gap, holds, continues higher. It does come down to the weekly low eventually, right? Which could have been a drawn liquidity. But the price action was just so choppy. This was Monday, Friday, I believe, right? And so choppy, even though it comes down, holds this, it would have been a very, very choppy move to wait out for. And then price just what does price do at the end? Takes out these equal highs eventually, finds resistance, and is now consolidating sideways. And this probably happens during Thursday retail sales news. Honestly, going into next week, drawn liquidity at that next low. We have weekly time frame. We have an inside bar. If we take out Friday's high, or even Friday's high most likely, or this high, we've got bearish imbalance being held. We could potentially come down to this level, so that's something to watch out for. Going into the week for pound dollar, I was quite bullish. We had just recently held this bullish fair value gap. Order flow is also bullish. We previously, after making this low, we have been holding this fair value gap. We held this fair value gap last week, took out previous week's low as well last week, and I was aiming either at this bearish fair value gap right there. We have another bearish fair value gap here, and I was also looking at this bearish inverse fair value gap. So these were some of the potential area of interest, right, that price could come into. Going into the week, we had a clear drawn liquidity at these highs after price held those bullish fair value gaps. Let me just do this. Price held the the low, and then we start to displace. Price held this fair value gap, and then price created another fair value gap right here, which was a really good sign, and I was hoping price would come back down to those lows, which it does, and then puts another fair value gap on Monday. However, price reaches my drawn liquidity before it pulls back into this fair value gap, which is annoying because my drawn liquidity is here and price has already taken that out. I expected price, now to continue down to these lows and then push up. However, price comes to this level at 10:11 a.m. and then finds support and pushes up. And the next day during PPI news, it continues to go higher. Because price was bullish Monday and Tuesday, I started to and came into this bearish fair value gap, bearish inverse fair value gap at this 50% level and held. I started to look for bearish trades, especially on the 4-hour time frame. You have these equal highs below a fair value gap, which is a good potential entry zone. So yeah, price rejected this equal high below the fair value gap, which is a great sign, and started to displace. However, it came into this bullish fair value gap and found support. Because of this, I put my drawn liquidity at this level, and then I started to look for shorting opportunities on the pullback. So on the pullback, on the 1-hour time frame, we rejected these highs, displaced with bearish fair value gaps, and then I was looking for an entry at this fair value gap. So price closed above that fair value gap. However, I was still looking for shorting opportunities, and price comes deep into this discount, right, at this fair value gap, start of this fair value gap. After news on the 15th of August, so 15th of August, GDP news came out, for pound, and price pushed up with this sharp, move up, came into a POI, and then put in this pattern, and then I believe I entered around this level, which stopped above those highs, and I honestly was not confident with this trade, so I exited the trade around these lows. Actually, I took it out at this fair value gap right here. So I knew it wasn't gonna, especially after closing above the 60-minute fair value gap, it was gonna have to be a short counter with news later on. So that was good. Then price pushes up and tanks and takes out the drawn liquidity during the retail sales news, which is interesting. Another trade I took was on Friday. I took a short, even though we've got this bullish order flow being respected, especially on Thursday. Held this low at this fair value gap, pushed up but because we were at the weekly time frame inverse fair value gap, I am thinking price is going to reverse. On the weekly time frame, it looks something like this. On the weekly time frame, it looks something like this. We're at that 50% of that inverse fair value gap. However, bullish order flow has been maintained for a while, and this is something to be mindful of. I took a short because price was coming into this fair value gap on the 60-minute time frame. However, realistically speaking, I should at least wait, for a deeper at this level. There's a fair value gap above this strong pin bar rejection candle, or even better at these highs, equal highs. So let's see. Price has been coming up to that level with strong bullish momentum. At least I could have waited for price to come to this high right, or better this high right here with a fair value gap there. That inverse fair value gap was previously rejected and a nice rejection candle, but I was quite eager. I saw this sharp leg up to that 60-minute fair value gap after, manipulating the Asian high, and I took an entry at this engulfing candle, and because I didn't like the area we was in, I got out straight away. And then price does this, pushes down further, and then it does find, small resistance at that level, but it's not significant enough to be taking a trade at that level. Then we finally run into this high, and this is where I believe I took another trade right at this level. This sharp leg up that closed above, and then we put in a pin bar, and then I believe I took a trade at these highs, and because I was expecting some kind of a reversal here, I let the trade play out, and eventually it pushes up and closes. However, I took this trade on multiple counts, and on most of them I got out at this fair value gap, which was still a 2R, and although only 5 or 6 pips, so it's not really worth your time. And then the rest, the one account that I wanted to let it play out on, it hit stops, so there's that. Had I taken partials on that account at this level and let it run, at least I would have been out with like 0.5%. Now I was waiting for price to come into this fair value gap above this candle, rejection candle below these equal lows, right, and find some kind of resistance, pull down, and then push back up to those equal highs. Price comes up to that level, it consolidates, and then it's clear around the 15-minute, consolidates, and then pushes up and holds that level with a strong pin bar. This sharp leg up, I wouldn't have minded taking a short at this level, but I missed it, and then I placed a sell order at this level. Stops, I gave it some breathing room because I keep getting, with having some really small stops, I seem to want to get out of the trade straight away, and because I know, all right, this level is pretty strong POI, I wanted there some to be breathing room, and then price taps into that high, triggers my entry, and then it drops, pulls back, right. I believe I took partials. I took a partial straight away at somewhere here, moved stop to break even, and then that allowed me some freedom to continue taking partials along the way. Doing that was a lot more calming, and also a lot more, less nerve-wracking in comparison to just holding a trade and aiming for it to, hit a really low. And then, as I was predicting, price came to this fair value gap and found some support, and then continued higher until the day closed. And that was pound dollar for me this week. Took some trades on Aussie dollar on Friday. So we rejected this low last week with this strong, rejection candle. And on Thursday we closed the week like this. The only problem I had was this bearish fair value gap. However, seeing these two fair value gaps, price can come up to the second one, start the second one, especially after this strong rejection. So Thursday we had come down to the low of the week and rejected, and I was anticipating price to come up to the highs of the week, especially the fact that this daily time frame fair value gap hadn't been tested after closing above. So I was expecting price to come up to at least that level, and that was my drawn liquidity. Also, what made it clearer was the rejection of the Monday's low was this strong bullish candle that held on Thursday, right? This bullish fair value gap was held. Order flow on 240 is strongly bullish after rejecting that low, and especially on Thursday. And going into Friday, I saw that, and that was one of my main reasons to go long. So yeah, we put in another fair value gap that was respected on Friday morning Asian session, and then we respected this another fair value gap. And honestly, I was hoping price would come down to the second one rather than the first one. And I was looking for trading opportunities at that level. So what I saw was price came down, tapped this, and then closed above. Although it hadn't closed above, it rejected this candle's high. On the 15, it closed above, and I saw this rejection candle right here. And after seeing that, I wanted to get into the trade because I was expecting price to run up. I put my stops there and then targets there, and then I get stopped out. It's not that I get stopped out, I exit the trade early because I was expecting price to come down to this low. So it was a break-even trade almost. Then I took another trade here, I think because price took out these equal lows, tapped into that 50%. I took a trade right here. I obviously wanted price to go up to those highs. Stops where I didn't put a stop loss there, so obviously I was on edge the entire time. And as soon as price started to move in my direction, I took the trade off and then let it play out. This was also at 12:10, so not a good time to look for a trade. Want to wait for at least a New York session. So price starts to push up and then pushes lower. This is 2 p.m. on Friday now. And I believe I took another trade after seeing these closes above and at this pullback, right? I believe at 3-1, somewhere at this level, I took a trade. Again, no stop loss, even though I should have put some stop loss. That would have given me some confidence in the trade. And then price continues to consolidate. Comes down to this 60-minute fair value gap. Remember, I was expecting price to come to these lows. Hence the main reason I was not very confident with this trade. I took a trade there and then I got out straight away. Again, early exit. And then price starts to displace bullish and then hits that drawn liquidity that I was planning. I was hoping price would get to. And it does, and it continues higher up all the way. So these are all the trades that I took this week. In total, there are, how many? 15 trades. Again, quite a lot. So let's see how many good trades. Like, there were 5 good trades. 3 of them I exited early, which ran, for profit. 1 was a good 1.5 trade, and the other was a stop. So ideally it could have been, even if this was 1.113, 4.5 -1, could have been a potential 3% trade week, because I take too many bad trades and get stopped out. Whenever I do enter a good trade afterwards, I seem to want to exit that trade straight away. So that's something to work on. Most of the good trades seem to come in after one, like, New York session after 2 o'clock. And most of the bad trades seem to come in after 11 and before 1 o'clock, between that lunchtime period in the UK. Again, with the OK trades, they seem to come in after, lunchtime or before lunchtime. So maybe something to consider, not to trade in those hours. And that's a wrap for the week. I will be analyzing each trades again while watching this video, and make comments on each of those trades, and try to eliminate those ones that obviously didn't make sense, and try to stick to the ones that I actually exit early on, because they seem to be the good types of trades. And that's that.